Hi, this is Carl Weiss from Follow the Bots, and I just want to do a quick recap of a trade that we've been documenting and talking about since the low was put in. We've been calling it the FOMC Low on July 31st, where a low was put in at 1680. And we had been giving out a lot of documentation and been talking up this number a lot, 1680. And we want to show you how we knew it was a comfortable and safe trade to buy the low here when the market pulled back to this point about a week later. So I'm just going to pivot over to our website and show you what we call our market structures. So the market structure is a really good way for you to start off your trading day because it gives you an overview of what we're thinking in terms of support and resistance levels. And as you know, we always want to sell resistance and buy support. So this is Wednesday's market development for Thursday's reference points, and Wednesday was the day, Wednesday, July 31st of the FOMC meeting. And this is when we first started to denote and talk about the low in this area, where we said minor support is at today's low, 1681, 1682. And at this point, it was to be viewed with suspicion. The next day, after Wednesday, is Thursday. And on Thursday, after the trading day, we discussed trading points, reference points for Friday. And I want to show you here at the top of the market structure, we maintain a gallery. And you can see this is when we're starting to track this number. This white dotted line is at 1680, the FOMC low. The next day, Friday, we have the same graphic line we're tracking here. It's now a blue line at 1680. And I think it's again here on a more point and figure type chart here in the 1680 with the arrow at it. If we go over to the next day, which Monday's reference point for Tuesday, we're starting to denote here that it's 1680, that this is the starting point of the run. So you can see our thinking has evolved, that we're saying, no, this is the starting point of the run. That's where known support's going to be. And now Tuesday, we're actually defining it here, the FOMC's low, the starting point of the rally. And we denote here in the text, just so people know that the trading range refers to the July 31st low. We've been calling the FOMC low at 1680. So this is an important number. And as for always buying support, first time it comes to 1680, we're going to want to look to buy. So what we've just discussed is more of the macro view, and we're going to drill down now into more of the micro view to see what the bots were doing at that number. I put here a horizontal line at 1680. August 7th, which was yesterday, and you can see the market pulled down precipitously. We had a bunch of selling as the market came into the low. And then right here at the low, we did see a sell programs waning, which means the sell programs that pushed it down were starting to get tired. Bounce up, the buy programs waning, and then what we'd call a right shoulder. So here's your first distinct right shoulder, and you see the buying coming here, and the market moved right up. So if you were to wait to buy anywhere in this range, you could start buying once the sell programs are waning, and I'll just go to a crosshair in the 82 area. Market pull down. There's plenty of opportunity to get in this trade.
To learn more, take a tour of www.followthebots.com.